On January 15, 2026, the U.S. Supreme Court delivered a decision that would reverberate across continents and industries. In a historic ruling, the justices struck down the Trump-era tariffs on Chinese goods, a policy that had defined U.S. trade relations for years and shaped the global economic landscape. The courtroom was tense, with legal experts, journalists, and business leaders awaiting the outcome that would set a new precedent for international commerce. The announcement sent shockwaves through global markets. Stock exchanges from New York to Shanghai reacted instantly, with traders scrambling to adjust to the new reality. Financial news tickers flashed red as investors tried to make sense of the sudden shift, and world markets experienced a cascade of volatility. The decision not only affected Wall Street, but also rippled through every major financial center, highlighting just how interconnected the world's economies have become. This landmark decision dismantles a core piece of the America First economic doctrine, which had prioritized domestic industries and imposed strict barriers on foreign imports. Overnight, businesses worldwide were forced to rethink their strategies. Cargo ships en route to American ports, international business deals in progress, and manufacturing lines in China all faced immediate uncertainty. Companies that had spent years adapting to the tariffs now had to pivot quickly, reassessing supply chains, pricing, and partnerships. The ruling challenges the limits of presidential authority and trade policy, raising profound questions about the future of economic nationalism in the United States. For years, the debate over who controls trade policy, Congress or the president, has simmered beneath the surface. Now, with this verdict, the Supreme Court has drawn a new line in the sand. Political leaders, legal scholars, and activists on both sides of the aisle are grappling with what this means for the balance of power and the direction of U.S. economic policy. For businesses, families, and governments, the implications are immediate and far-reaching. Small business owners must quickly adapt to changing costs and supply options, while families wonder how the ruling will affect prices at the store and job security. Government officials at every level are holding emergency meetings to assess the impact and craft new responses. The ripple effects are being felt in boardrooms, living rooms, and government offices alike, as everyone tries to navigate this new economic landscape. Tonight we'll break down how this verdict changes the rules of global commerce and what it means for the future. We'll hear from experts, business leaders, and everyday people whose lives are being reshaped by this decision. From the ports where goods are loaded, to the studios where analysts debate the future, the world is watching closely. The stakes are high, and the questions are urgent. How will countries respond? What new alliances or rivalries might emerge? And what does this mean for the average consumer? The story is far from over. This is a pivotal moment for the world economy, as nations, businesses, and individuals adjust to this new reality. The coming months will reveal the true impact of the Supreme Court's decision. Stay with us as we continue to follow this unfolding story, exploring the challenges and opportunities that lie ahead in a rapidly changing global marketplace. The story of the U.S.-China trade war is one of high-stakes confrontation, global economic ripples, and legal battles that continue to shape the world today. It all began in 2018, when the Trump administration launched a bold and controversial campaign to address what it saw as unfair trade practices by China. The White House announced sweeping tariffs on hundreds of billions of dollars worth of Chinese imports, targeting everything from electronics to machinery and even everyday consumer goods. The stated goal was to pressure Beijing to change its policies on intellectual property, forced technology transfers, and market access for American companies. The move sent shockwaves through global markets. American ports saw a surge of cargo containers as businesses rushed to import goods before tariffs took effect. Customs officers worked overtime, inspecting shipments and recalculating costs. The Trump administration argued that these tough measures were necessary to protect American jobs and industries, but critics warned of unintended consequences. China quickly retaliated, imposing its own tariffs on American exports, especially agricultural products like soybeans, pork, and corn. This tit-for-tat escalation hit American farmers hard, leading to protests and pleas for relief. Chinese ports slowed their intake of U.S. goods, and global supply chains began to fray. What started as a policy dispute soon became a full-blown trade war, with both sides digging in for a prolonged standoff. The impact rippled far beyond government offices and diplomatic meetings. On the ground, businesses faced chaos and uncertainty. Factory floors slowed or halted production as critical parts became scarce, store shelves emptied of certain products, and business owners scrambled to find new suppliers or pass rising costs on to consumers. For many, the trade war meant higher prices, lost contracts, and a scramble to adapt to a new economic reality. The legal foundation for these sweeping tariffs was fiercely debated. The administration relied on decades-old laws, originally intended for national security emergencies, to justify the duties. Critics argued that these statutes were never meant to be used as tools in long-term economic disputes between major world powers. Lawmakers, legal scholars, and business groups questioned whether the executive branch had overstepped its authority. The result was a tidal wave of litigation. Thousands of lawsuits flooded federal courts as importers and trade groups sought relief from what they saw as unlawful and economically damaging duties. Legal teams pored over mountains of paperwork, challenging the government's interpretation of trade law and demanding compensation for losses. The courtroom became a new battleground in the ongoing trade war. In 2020, after months of negotiations and mounting economic pain, the US and China reached a partial trade deal. There were handshakes and headlines, but the agreement left most tariffs in place. The underlying tensions remained unresolved, and both sides continued to eye each other warily. For businesses and consumers, the uncertainty lingered, and the global economy remained on edge. Now, years after the first tariffs were announced, the legal and economic standoff has reached the highest court in the land. The Supreme Court is set to decide whether the government's actions were lawful, and the outcome could reshape the balance of power over trade policy for years to come. The Supreme Court case wasn't just about tariffs, it was a test of presidential power. Plaintiffs argued the president overstepped, using emergency powers to impose tariffs without Congress. The administration claimed China's actions justified emergency measures, but critics warned this set a dangerous precedent. The case wound through lower courts, with billions at stake and constitutional questions looming. Today the court sided with the challengers, reasserting Congress's authority over trade. This decision will shape the balance of power for years to come. By late 2025, US-China trade had collapsed. Imports from China fell 28%. Exports dropped 38%. China shifted to other markets, posting a record global trade surplus, while US logistics and shipping sectors struggled. Warehouses emptied as businesses delayed orders, waiting for clarity on tariffs. The looming Lunar New Year shutdown in China created a tight deadline for importers. Companies faced a dilemma: order now and risk high tariffs, or wait and risk empty shelves. Even a temporary truce failed to revive trade, as uncertainty paralyzed decision-making. Small businesses were hit hardest, their futures hinging on the Supreme Court's verdict. The stage was set for a dramatic reaction. The Supreme Court's decision sent shockwaves through the business world, triggering a sudden and intense rush across industries. In offices and trading floors, phones rang off the hook as executives and importers scrambled to react. The ruling, which many had been anxiously awaiting, instantly changed the outlook for thousands of companies relying on international supply chains. Importers raced to place last-minute orders before the Lunar New Year shutdown, hoping to get their goods shipped out of China before factories closed for the holiday. The timing couldn't have been more critical. Every hour counted as companies tried to beat the clock and secure inventory. Experts now predict a dramatic surge in US imports from China, as businesses large and small try to take advantage of the new window of opportunity. Ports are bracing for a wave of incoming shipments, and logistics providers are working overtime to keep up with the demand. Companies are racing not just to restock, but to capitalize on tariff-free goods while the policy window remains open. The sense of urgency is palpable, with warehouses buzzing and trucks rolling out in rapid succession. The prospect of tariff refunds has added even more fuel to the fire. For many businesses, this means a rare chance to recoup losses from previous years and free up capital that had been tied up by high import costs. With this unexpected financial boost, companies are reinvesting in new inventory, expanding product lines, and even hiring additional staff to handle the increased workload. For some, it's a long-awaited break after years of uncertainty. Small and medium-sized firms, battered by years of unpredictable tariffs and supply chain disruptions, are especially eager to seize this moment. Many have struggled to keep shelves stocked and customers satisfied, and now they see a fleeting opportunity to catch up. These nimble businesses are expected to move the fastest, leveraging their agility to place orders and secure shipments before larger competitors can react. For them, speed is everything. For many, this is more than just a business opportunity. It's a lifeline. The chance to recover lost ground, rebuild customer trust, and stabilize their operations is invaluable. As new shipments arrive and shelves are restocked, there's a renewed sense of hope. Business owners are optimistic that this could mark the beginning of a turnaround. Still, some industry veterans urge caution. They expect a more measured response from larger corporations, many of which had already begun restocking in anticipation of the ruling. These bigger players, with their sophisticated logistics and forecasting, are less likely to be caught off guard. Their steady approach may help stabilize the market in the weeks ahead. The result is a volatile, fast-changing logistics landscape. Shipping routes are shifting, delivery schedules are being rewritten, and everyone is scrambling to adapt to the new reality. The scramble is on, but as the dust settles, the long-term impact of this decision remains uncertain. For now, businesses are moving fast, but only time will tell how this dramatic shift will reshape global trade. For American companies, the ruling is a game-changer. Supply chain strategies must be rethought overnight. The China Plus One model is now in question. Do firms return to China or stick with new suppliers? Billions in tariff refunds could jumpstart investment, hiring, and expansion. But uncertainty lingers, as the administration may seek new ways to reimpose tariffs. Some businesses will rush back to China for short-term gains. Others will hedge, wary of future shocks. Competitive dynamics shift. Those who gambled on tariffs being temporary now have an edge. The market is poised for rapid change as companies reposition. The post-tariff era is here, but risks remain. The big question for consumers: will prices drop? With tariffs gone, the cost of many goods should fall, especially for electronics, furniture, and clothing. Retailers may pass savings to shoppers, but price cuts won't be immediate. Old inventory still reflects tariff-era costs. Expect the first relief on fast-moving items. Other prices will adjust more slowly. Tariffs are just one factor. Transport, labor, and inflation still matter. The end of tariffs is good news, but don't expect a cure-all for inflation. Some relief is coming, but the full impact will take time. The Supreme Court's ruling is a political bombshell, curbing executive power and fueling debate in Washington. Critics hail it as a victory for the rule of law. Supporters of tariffs call it judicial overreach. The administration is already exploring new ways to restore protectionist policies, signaling more battles ahead. The decision thrusts trade and presidential authority into the spotlight for upcoming elections. The divide between Congress and the White House on trade policy is sharper than ever. The U.S.-China relationship remains a flashpoint. The debate over America's role in global trade is far from settled. The Supreme Court's verdict closes a turbulent chapter but leaves the future uncertain. Businesses are scrambling, consumers hope for lower prices, and billions in refunds are on the line. The ruling reasserts Congress's role in trade, but the White House may try new legal tactics to revive tariffs. The core U.S.-China tensions over technology, intellectual property, and influence remain unresolved. Relief may be temporary. The forces behind economic nationalism are still active. The next moves by Congress and the administration will determine if this is a turning point or just a pause. The story of global trade is still being written.